Internal Revenue Service IRS Tax News. Every taxpayer has the right to challenge the IRS's position and be heard. IRS Tax Tip 2020-171, December 15, 2020. Taxpayers have the right to challenge the IRS's position and be heard. This is part of the Taxpayer Bill of Rights. There's a link to the Taxpayer Bill of Rights here, which clearly outlines the fundamental rights every taxpayer has when working with the IRS. Taxpayers have the right to raise objections, provide additional documentation in response to formal or proposed IRS actions, expect the IRS to consider the objections timely, have the IRS consider any supporting documentation promptly, receive a response if the IRS does not agree with their position. Here are some specific things the right to challenge the IRS's position and be heard affords taxpayers. In some cases, the IRS will notify a taxpayer that their tax return has a mathematical or clerical error. If this happens, the taxpayer, so obviously if there's a mathematical or clerical error, what will often happen is the IRS may not do like a full audit there. They're going to basically make the adjustment. It's a calculation that they can see on their side, and they can possibly make the adjustment, send out a letter typically. The letter will typically have a proposal saying, hey, look, this is what we think it should be, and basically ask whether or not you agree with it. And then you can either agree with it or disagree with it, but you have the right to do either. Your goal, of course, is to respond to the IRS and either support your opinion on the original stance or to agree with the IRS's clarification. So back to the text. If this happens, the taxpayer has 60 days to tell the IRS that they disagree. So and that's typically if you've received one of these letters, of course, that's how it's going to be formatted. It's going to basically ask whether or not you agree with it and to respond within the time period, either agreeing or, explaining the case as to why you disagree with the position taken by the IRS. Should provide copies of any records that may help correct the error. Obviously, if you disagree, then you're going to want to be able to support the disagreement and provide any documentation necessary to support your original opinion that the IRS is trying to overturn in some way, shape, or form. May call the number listed on the letter or bill for assistance. So typically when you get a letter like that, there'll be a number for that you can call on it, possibly for help. Can expect the agency to make the necessary adjustments to their account and send a correction if the IRS upholds the taxpayer's position. So if your position is upheld, in that, they're going to agree with your position as you provide the added documentation and whatnot, then they're going to provide you information to tell you that they withheld your position or they agree with your position. They upheld your position, not withheld, upheld your position. Here's what will happen if the IRS does not agree with the taxpayer's position. The agency will issue a notice proposing a tax adjustment. This is a letter that comes in the mail. So typically when the IRS contacts, most of the time it's going to be through actual mail. They'll send it in the mail and ask for a response, typically within the 30 to 60 days. If they don't get one, they'll slowly keep on sending those letters out. So you're typically very aware of what the IRS's position is, unless they have the wrong mailing address, because they will typically tell you well in advance, what they're going to be doing, in that process by keeping the slow process of sending letters out every 30 to 60 days if there's no response to them. So this notice provides the taxpayers with the right to challenge the proposed adjustment. The taxpayer makes this challenge by filing a petition in the U.S. tax court. The taxpayer must generally file the petition within 90 days of the date of the notice or 150 days if it is addressed outside the United States. Taxpayers can submit documentation and raise objections during an audit. If the IRS does not agree with the taxpayer's position, the agency issues a notice explaining why it is increasing the tax. Prior to paying the tax, the taxpayer has the right to petition the U.S. tax court and challenge the agency's decision. In some circumstances, the IRS must provide a taxpayer with an opportunity for a hearing before the Independent Office of Appeals. The agency must do this before taking enforcement action to collect on a tax debt. These actions include levying the taxpayer's bank account immediately after filing a notice of federal tax lien in the appropriate state filing location. If the taxpayer disagrees with the decision of the appeals office, they can petition the U.S. Tax Court. More information can be found at the links below. Publication 556, Examination of Returns, Appeal, Rights and Claims for Refund, and Publication 1, Your Rights as a Taxpayer. There's links to those items here. There'll be a link to this in the description.